So, good evening, all. This is Dr. S. Shekhar, founder and managing trustee of Star International Foundation for Research and Education. We welcome you all for the fourth day of 5 days online workshop on Foundation of Stock Market for Beginners. Now, the session was handed over to our resource person, Mr. Alauddin Basa, sir. Sir, welcome you, sir.
Thank you, sir. Good evening to one and all present here. So warm evening welcome. So I think, can we start, sir? Okay.
Yes, sir.
Okay. Okay, guys. Once again, good evening to one and all. Yesterday we discussed about as a technical analysis. What are the chart analysis will follow and how to trade a particular script based on the pattern. It may be a trend line or channel or by using support resistance. So we'll do, so we have discussed a lot of things yesterday. So I hope yesterday section was useful. One or two topics are pending in technical analysis. Once we cover today, we'll move on to the today's chapter. Okay. Before going to start the session, from the last session, if you have any doubts, guys, like trend analysis, channel, and support and resistance.
No, sir.
Okay, then we'll move on to the next topic. So next one is, so yesterday we just recall the yesterday topic because it's a very important one. So first one is we'll find out the trend of the market, whether it's uptrend or downtrend or sideways. Generally, market have a three trends: uptrend, sideways, and downtrend. The market will go from bottom to top without breaking the previous low. It is called as the uptrend. That is higher high, and higher high. Similarly, it goes down like lower low. It is called as a downtrend. Okay. So based on this trend market, we will decide where going to buy or sell. Okay. Okay. Based on this trend, we'll identify the market. Okay. So next we'll discuss about trend line. So based on this trend line, before going to trend line, we'll find out the support resistance. It's a very important one. So based on the support resistance, we can find out the exact value of the particular stock to predict the future value of the particular stock based on support resistance. Okay. So this is support and this is resistance. And third one is obviously types of trends: sideways, uptrend, and downtrend. Final one is channel pattern. So channel is like a double line of trend line. Okay. So based on we have three kinds of channels: uptrend, downtrend, and also sideways channel. Okay. Let's move on to the today's topic is next very important and a very basic criteria in technical analysis: double top and double bottom. First, we discuss about the double top. What is mean by double top? Double top is nothing but double top is nothing but the same value. It will be written once again for the particular time period, particular different time period It is called as the double top. For example, consider HDFC Bank prices 10,000 rupees at 11 o'clock for intraday. I'm talking about the intraday. For example, HDFC Bank prices trading at 1,000 rupees at 11 o'clock. Okay, and in nearly 11:30 or 12 o'clock, the same price again it goes to reach at 12 o'clock or 1 o'clock. It means the same 1,000 rupees will reach at 12 o'clock or 1 o'clock. It is called as the double top. Vice versa is a double bottom. In double top, we are always think about like as a M pattern, and the double bottom we'll consider as the W pattern. So this first step we'll just go on double top. So in double top, I will show the double top pattern. So this is the first price. After that, trading some duration of period based on your time frame. It may be 5 minutes or 10 minutes or 1 hour or daily, whatever it is. Okay, based on your time duration, the same price will occur and particular time duration. It is called as the double top. This is the first one. This is the second one. Once the double top is occur, it indicates the market going to down most of the time. It is not a 100%. Okay, but compare with the previous chart analysis, double top mostly 70 to 80% will work. Okay, sometimes it may be it is a false one, but most of the time double top and double bottom will work. Okay, so we'll discuss with a live example. There's no issue. But what is going to be double top is, I am repeat once again, the same price will occur in the particular time duration. Particular time duration is called as the double top. Okay. Second point is, when we are going to take the trade means, once it breaks the previous low, once it occurs the first top, we can trade some 5 minutes or 10 minutes, whatever it is, based on your time duration. Again, it will reach this second time in the same time, same price, and again it goes down and it breaks the previous support. This is the correct opportunity to sell the particular stock. It is called as double top. Okay, we'll move on to one real-time example. Okay, we'll move on to any examples. Okay, guys, it is your choice. You can select any stocks. Can you refer any one of the stock from the participant? Hello.
Titan.
Yes, Titan. Titan. Yes, Titan. Okay. Titan. Okay, we'll find out the. Yes, so clearly in 5 minutes time frame. Okay, just so this is the first top. Okay, from 5 minutes duration, this is the first top, and this is the second top. This is the second top. Almost the price is same. Okay, I just put the cursor. You just check the value. So this is the value at 10.25. Okay, what is the high value of Titan? Anyone from the participant? What is the high value of Titan? 3,738. Okay, at 10.25. After that, it goes down and trading at some low values, and again it will come back, roll back, and again it will reach same price. You can see the price again. It almost same price, 3,739. Okay, at 11:45. Okay, it will take from 10:25 to 11:45 means almost 1.5 hours, and it can reach again the same price. Okay, once it can reach the same price, the market, it indicates it may be going to downfall. So again, it will similarly it's go to the downfall. Once it's break this previous support, they technically they are called as neckline. Okay, in double top or double bottom, the previous support they technically called as neckline. Okay, so just mark the neckline. I just mark the neckline as the black color. Okay, once it breaks here, once it's break, we'll take the trade. Okay, this is the time to take the trade. Okay, then what is the target of this trade is compare with the previous high. Okay, I will show you how to mark the target. Okay, so this is the exact target of, just copy paste and put it as, this is the exact target of the your trade. Maybe it comes here and it goes to the stop loss. There's no issue, but generally you can find out the sorry, you can fix the target past the previous high in the market. So this is the double top. Based on the double top, you can take the trade. Okay. If you want to fix the target based on the percentage, okay, there's no issue. You can just put this here and 16 points profit, that is 0.5% in 5 minutes time frame. Okay, because 5 minutes time frame is a very short period. So even though 16 to 20 points, it will be good for a particular trade. But technically, we are speaking, the target is not achieved for in this trade. Okay, we accept it. Here, the stop loss is occur. Here, the stop loss will hit. Okay, because we are going to buy this here. So once you break opposite side, you can just exit from your trade. Okay. So this is the example of double top. Okay, we'll move on to any one other stocks from participant.
Reliance Power.
Reliance Power. Reliance Power, it is not a intraday stock because there is a no volume in intraday. So can you refer any other stocks?
Suzlon.
Suzlon also, it's not a intraday stock, but okay. But anyhow, we'll check. It's the short double top, so you don't consider these kinds of double top. Okay, you should have a sufficient gap between the one top to another top. Okay, then only you can consider say double top. This is also not a intraday script. Any other script?
Tata Steel.
Tata Steel. Tata Steel is good. It's a high volume stock. So we'll find out the double top. Yes, here also almost the same price in this scenario. Okay, this is the first top and this is the second top. This is the value of high is 153. And this is the value of also 153.27. This is value is 153.34. Almost this is the one first stop is the second top. So this is the neckline. Okay, once it breaks, to mark the target point from the previous high. This is your target. So exactly it achieved. Yes, achieved target. So within a 5 minutes time frame, okay, we get almost 0.66%. So within a 5 minutes time frame, it's a huge profit. So this is the way to predict the double top and to get the trade. Any doubt, guys, in double top?
No, sir.
No, sir.
No, sir.
Okay, we'll move on to the double bottom. So similarly, it's like vice versa, it's called as the double bottom. It's represented as a W. In double top, represented as the M pattern. It's a double bottom. Similarly, is the bottom one and some after the some time duration, it's occur at the same point of view in bottom two. After it occur in bottom two, once it break the neckline, we go for the buy. We can set the target as the previous low. Okay, we'll move on to the live example. Any script from the participant?
Wipro.
Any script?
Ultratech.
Ultratech. Ultratech. Okay, good. Ultratech. It's a double bottom. So almost it's a double bottom. Okay, if you not consider, it's the low is 11,545, 11,540, because 11,000 rupees stock we are not considered about the 5 rupees or 10 rupees. So it's almost double bottom. So this is the neckline. Okay, this is the neckline. Once it breaks, we go for buy. Okay, once it's break, go for buy. Okay, so your target is the previous low. This is your target. This is your target. So my target is achieved. So how many percentage or how many points? 73 points, almost 0.64%. So more than 0.5% in 5 minutes time frame is a very good profit. Okay. It's clear with double bottom.
Sir, stop loss.
Yeah, this is a stop loss. Once it's again you break the buying level or selling level, it is called as stop loss. Once it's break and close, it is called as stop loss. These candles are have a only week, but you always consider the closing point. For example, this candle it breaks our buying point, but closing point is here above this line. So you always consider about only closing, not open, high, and close. So this is your stop loss. Same buying point. Or if you take this, this is the final stop loss. This is the final stop loss. But my suggestion is once it's closed below this line, okay, you can exit.
Okay,
Once a candle closed this line, better to exit. Clear?
Clear, sir.
Hello?
Yes, sir, clear.
Hello? Clear. Any doubt in double bottom?
No, sir.
Sir.
Not,
Double top, double bottom is the easiest way to find out your trade in stock market. Because if you are backtrack the any script, it is able to seeing a lot of double top and double bottom. Okay, but you don't trade for all the double top and double bottom, because the market in high, if double top is occur, you go for the sell. If market is down in downside, if double bottom will occur, you go for buy side. Don't try to the opposite trade. For example, if market in uptrend, okay, somewhat it will be retest, it will come. You don't go for sell, because market is uptrend. You don't to try to trade at opposite trade. Okay, if market in uptrend, you wait for double bottom and go for buy. If market in downtrend, you just wait for double top and go for sell. And yesterday, I think one of participants asked, sir, how to sell this stock in stock market? Because if I have once I buy the stock, I am able to sell the stock. Without having any stock, how to sell any stock in stock market means there is only two areas, that is two kinds of business. So without having any our product, we can able to sell. The first one is stock market. The another one is, any idea, guys? Any idea? In only two kinds of business, you can sell a product without you having this product. Any guess? Okay, I will explain. First one is stock market. Without having any product, you can first sell it and buy it. In real time example, I will show you how. For example, the 5 members order the Voltas AC, at Amazon. Correct. This is the first point. Second one, Amazon not have the all the products should have a own control. Okay, because it is not possible to Amazon holding the thousands of AC, because if thousands of AC is ordered from the Amazon means once they can buy from the particular company and they can sell to the customer. Okay, so for first one is the 5 members order in the Voltas AC at Amazon. At the time there is a no AC product. It's a no AC product at the time of customer order. Okay, but in Amazon they accept the order and sell the product. Once we can pay or cash on delivery, whatever it is, we can pay. After paying the amount through credit card or debit card or cash on delivery, whatever it is, Amazon can sell the product. Once accept the order and sell the product. After that, Amazon put the order to Voltas company. Okay, and the last one is, once receive the product from Voltas, it will take 1 day or 2 day or 3 day. Once receive the product, the Amazon deliver the product. Deliver the product. So I'm repeat the same steps. I hope all of you understand. Just imagine the first 5 or 10 members put the order of Voltas AC at Amazon. At the time of the order, Amazon may or may not be have a product in this warehouse. Okay, most of the time they are not holding the product at the warehouse. Once customer order, once put the order and pay the amount or confirm the order, after that the Amazon go to the vendor and buy the product and just deliver to the customer. This is the basic process of all the e-commerce like Flipkart, Myntra, Azio, Amazon, etc. So this is kind of transaction or this kind of trading is called as sell to buy. Once first they sell the product without having the product to sell the product to the customers. After that they can buy from the vendor and again deliver to the customers. Are you clear, guys?
Yes, sir.
Sir.
Say yes or no something, guys.
Yes, sir. Yes, sir.
Yes, sir.
Yeah, this is the method of trading of sell and buy. The same concept will applicable in stock market also. So you can sell the product and buy the product in stock market. Without having a product, you can sell at any time. Similarly, you can buy at any time. Okay. So this is the one of the major scenario in stock market. So next one is some of the participants are asking about the sir, please suggest some indicators. Okay, basically we are not recommended any indicators. Yesterday itself I told indicator is only for indication, not for confirmation. But same time you can add the indicator as the add-on value or supporting value for your trade. Okay, even though it's a intraday or swing trade or a position trade, whatever it is, or even though long term, you can add the indicator as the supportive tool, not for the confirmation tool. Okay, so personally, I'm not suggest, but personally, I recommend these kinds of simple indicators. It may be useful for your trade. First one is RSI. Second one is moving average. Moving average, we have two types of moving average. simple moving average, like called as SMA, and exponential moving average, EMA. You compare with the SMA, you go for EMA. We'll explain in later. And third one is super trend. 90% of the traders you can trade by simply believe the super trend indicator. Please don't do like that. And fourth one is Bollinger Band. It's somewhat good. Fourth one is CPR. It is good for equity. And the last one is Maclaurin dynamic. It is somewhat useful for compare with the other indicators. So these are the top 6 indicators. In my point of view, it's somewhat good for your intraday trade as well as long-term trade. Okay, let's so on with one by one. First one is RSI. Okay, just remove this all this. Okay, we'll take as the Ultratech. There is no issue. By using this indicator, you just type RSI. It is relative strength index. I just click this indicator. Here, that indicator clearly shows some default value. Okay, the default value from 20 to 80, the default value will occur. Okay, what it means, once it reaches the 80, the indicator is indicate the market will be overbought. Overbought means their market is going to downfall. Similarly, it reach in 20 points or near below the 20 points, it underrated value. So the market will maybe market will move on in upside. So this is the 2 points of scenario in RSI indicators. Compare with the other indicators, RSI is good. Sometimes it may be a fail. So you don't simply believe the indicators, but you can add this add-on value. This is for RSI indicator. And the second one is we'll add on super 10. Okay, just the super 10. I just remove this one because okay. So super 10 also similarly, once it red mark occur in this chart pattern, you go for sell. Once it converts in green line, you go for the buy. For example, you take as it today's scenario. Okay. So market open at 9:15. Okay, market at open at 9:15. Yes, 9:15. Okay, September 25th, sorry, 26th. Yeah, 26th, 9:15. Okay. Market open with the positive one from like today because it is in buy trend. Okay, it indicates as per the super 10, market open at buy trend. So once you can buy in this scenario, it will go up to only buy today. There's no sell in Ultratech as per super 10. Once you are buying here in morning, you get this kinds of profit. Almost how many points? Did you not nearly 300 points, and it means 2.62% you get the profit today. Okay, we go for another stock. For example, any stock, guys?
Wipro.
Wipro. In Wipro, okay, Wipro 26th. Yeah. So 26 open in green. Okay, 9:15 it's a green. As after that, it will change the trend at 140. It's at 140 is a sell trend. After again it will change 235 as the buy trend. So maybe the signals comes like that, buy, sell, because the short period of time, it goes for 1 hour or daily. It maybe it will take some time to change. Even though 1 hour daily, based on the fluctuation, the market will change. So see this is the buy. These areas are buy, and suddenly it will change as sell trend. Okay, within a short period, it's a buy. Again, within a short period, it's a sell. After that, again buy. So it indicates the market is not in a not a trend market. It indicates it is a sideways market. That's why within a short duration, this kinds of lot of signals are came within a short period means the market is not in trend. It may be a sideways or range bound. Okay, it's the super trend. And third one is we can randomly select Maclaurin dynamic. Okay, so similarly go with Maclaurin dynamic. Just hide the super trend. Okay. Simply below the line you go for sell, above the line you go for buy. Sometimes it's like a failure one, it's a false signal, it is also false signal, but it gives the good return. Okay, and this is the what type of market here?
Sideways.
What type
Sideways.
of market here? Sideways. That's why the indicator will not work. All the indicators or 95% of the indicator will work on trend market. It may be uptrend or downtrend. Sideways market, in my point of view, there is no indicator to work properly. It may work 1 or 2% or 10 to 20%, but it not work more than 80 to 90%. Any indicators, you can randomly check any indicators, it will work on trend market. It may be uptrend or it may be a downtrend. It's clearly work, but in sideways, they are not able to give the basic return, not even the good return. If you take the trade, the first one is here sell, again sell, here buy, here sell, again buy, again sell. Definitely you have your trade should be a loss one. So try to avoid the indicators for the long term. Even though intraday, you can, again I'm repeating the same one, you can just add on value. Indicator like as an add on value for your trade. Okay, don't simply believe the indicators for your trading. Okay, and participants, anyone want to interested to any indicators you want to suggest us to check in any script? Any one indicator from participant side?
Moving average, sir.
Moving, okay. Moving average. Okay. There are two kind of moving average, EMA and SMA. Will always recommend us EMA, exponential moving average. It will be good. Okay, moving average exponential. Okay, so moving average exponential, you always put as this is for a long-term investor. You put as 200. It's good for a long-term investor. We just put as the length is 200 for EMA. Okay, you can see this. Once it cross above the moving EMA at 200, most of the time it will work. You can just buy here. After that crossing EMA, you get a decent profit, almost 5%. Okay, again it occurs in retracement here. You go for the second buy here. Again you get similarly 5 to 6%. Here the market is sideways. It may be loss 1 or 2%. Okay, the first trade you got 5%. Second trade you got 5%. 5 plus 5, 10. In third trade you lose 1 or 2%. You will check it. Maybe 2.8, 3%. So 10 minus 3, 7% till now your profit. Again you go for the fourth trade. You get 6%. So 16 minus 3, 13%. After that, till you are in profit because the candles are not closed below moving average, EMA moving average 200. So out of 4 to 5 trades, you get more than 13 to 15%, even though you faces the 3% loss here. Okay, so if you are believing the indicators only, you go on with the EMA for long term. You put this setting as 200 at source is closed, not open, high or low. Always fix the source as closed. So based on the closed candle, you can decide. So EMA 200, somewhat good for long term. You can refer any other script. For example, I will move on SBI. Yeah, the SBI from long term in monthly, you just refer it. Yeah, once its buy occur at October 2020 at the cost of 180. So we'll move on from 180 to 688, almost 400% for long term. So a long term perspective, EMA 200 is good for long term investor. Okay, again I'm saying you can just add it EMA also as an add on value, not for confirmation. Clear?
Clear, sir.
Yes, sir.
Any other indicators you want to suggest?
Pivot point.
Huh?
Pivot point.
Sir, sorry sir. Any
Bollinger
Bands.
Yeah, no. Yes, pivot point. Pivot point, not for freshers, sir, because it will take some time to explain because a lot of supports and resistance. So it is not for freshers. If because I think you have experienced traders who refer the pivot point. Pivot point is not for freshers. Okay, that's why I'm recommending all these indicators for freshers. There's no complicated in this indicators. For example, if you're taking the Bollinger Band, it's a very simplest indicator. Anyone can access, anyone can easily analyze. For example, I will show the Bollinger Band. In Bollinger Band is yeah. We see the Bollinger Band. It's a very simple one. Okay. So there is a three lines. Within these three lines, the market will travel. So if you're reaching the higher one, we go for sell. If you're reaching the bottom one, go for buy. The stop loss is in between these, between the line. It's the stop loss for both buy and sell. Once I am buying this here, the stop loss is this one, and once I'm selling here, the stop loss is here. So simply you can buy and sell within this scenario. So it's the simplest way for the freshers. That's why I'm recommending these kinds of indicators. Maybe you can refer in your trade. Again, I'm saying just refer in your trade, not for confirm. Okay. So these are the some of the indicators in technical analysis. My final conclusion in technical analysis is always consider the market to be 80% in psychological and 20% in logical for technical analysis. Okay, 80% the technical analysis based on your psychology, not logical. But in fundamentally, market will be the 20% in psychological and 80% it should be logical. So compare with the technical, the fundamental analysis, it will give the good growth, good return based on technical analysis. Okay. So again, my suggestion is you start with the stock market life as the investor by using the fundamental analysis. Once you go through the stock market, even the 6 months or 1 year, then you can consider as a technical analysis. Directly don't go with the technical analysis. That means don't act as a trader at the starting scenario. Okay, so it is my point of view. I hope the technical analysis part will help you from the past 1.5 days class. Okay, now we move on to the today's section, because today's session is not a it's a very sorry very wide section. So we can I will try to convey this today topic in very simplified method. Okay, first one is we'll go on and discuss about future and options in trading. So what is meant by future and what is meant by options? Okay, in future, in stock market have only two categories. One is equity, another one is derivatives, and final one is currency. So we'll just skip the currency now. That's why I'm representing only two types. Generally, the stock market have three types: derivatives, yes, equity, derivatives, and currency. Okay. Already we discussed about the equity. What is in the equity? Equity is stock for the particular company. You can buy it, you can hold it any number of years. There is no time limitation in equity. Okay. For example, if I'm buying SBI today, I can sell tomorrow or day after tomorrow, or after 10 years, after 30 years, or after 50 years. Even though they sell the stock in my son or whatever it is, you can hold any number of years. There is no time frame for equity. That means normal stock. But once it comes under derivatives, and derivative have two types: futures and options. You can go with any one, future or option or both. All the derivatives should be based on the time frame. So compare with the equity, derivative is very highly riskable one. So in this junction, I convey to all the participants, exclusive for freshers, don't think about derivatives once you are entering in the stock market as a fresher. Minimum, you should wait 6 months to 1 year. You learn lot of things from the stock market. After that only you can decide whether you go for derivatives or not. Okay, derivative is very, very highly risk. Even you go for future or option, it's not an issue, but both are very, very risky one. Okay. You put as the disclaimer for today's class because many of the people that lose the money in derivatives only. Very, very, very few people only lose the money at equity because equity have a time to breathe, but derivatives there is no time to breathe in stock market. So it's very, very risky one. But if you have a good knowledge, good experience, okay, then you will move on to the derivatives. There is no issue. Okay. Okay. What is meant by derivative? It's a simple term. It's just a financial contract. By using the financial contract, you can just drive the underlying the asset, such as a stock or index or commodity or currency, whatever it is, for the particular time period. In simple words, you can buy the huge number of quantity of stock or commodity or currency, whatever it is, for the particular time period. So within a time period, if you have a profit, okay, you could book it and carry on. If you have a loss, there's no way to just exit from the loss. Okay, you don't have any option because everything should be based on time frame. It's very, very important one. The best example, if you bought any bakery items, they are labeled in these bakery items say expiry date. Correct? It may be 3 days or 5 days or 7 days. Whether you like it or not, whether you want or not, once you buy the product, whether you can eat it or waste it. Correct? Because the expiry day is very short period. For example, if you buy the biscuit or butter or whatever it is, the expiry day is maximum 7 days or 8 days or 10 days. Okay, within this short period, you can use it or lose it. Correct? So it is a very highly risky one. You are not able to hold a long period. Okay, you buy the biscuit and hold 1 or 2 years, it is not possible. Because already they are labeled at expiry date. Okay, you can use it before the particular expiry. Okay, similarly in derivatives, you can buy the any product like stocks, commodity or currency, whatever it is, it should be an expiry date. That means they have a time period. So within a time period, you can sell it or buy it, whether you have profit or loss. Okay, this is called as derivatives. In derivatives, have a two types: futures and options. Okay. Okay, options we'll discuss later. So first move on to the future. What's meant by future? Future is nothing but it's a simply future is called as contract. In this contract, the stock market is an agreement between the buy and sell. Okay, once you buy or sell the product, that means product means stock or commodity. Okay, the asset can be a stock or commodity for particular time period. Okay, the futures can be useful for speculation or hedging. What is meant by speculation? It's like a guessing. For example, today I bought one bulk of quantity. For example, today I bought 1,000 shares in stock market. Tata Motors means what I guess it may be a grow in 2 days or 3 days or within a particular time period. It may be grow. It may be grow, not it must be grow. Okay, you mark my word. It may be grow, not must be grow. So we can assume that is guess the script. It may go for uptrend or go for high price. It is called as speculation. Second one is hedging. Hedging is sometimes, not a sometimes, most of the time to avoid the risk at in our portfolio. For example, you can buy the same product and similarly you can sell the same product. So it may be you can reduce the losses or it can manage your losses. It is called as the hedging. Okay. What are the futures in contracts? We have a simply they are called as stocks, commodities, currencies, and the index. Stock, you all of you know, there are a lot of stocks are there. Out of 5,660 stocks, only few stocks are in future in derivatives, not for all the stocks, because based on the market capitalization, volatility. Okay, so based on this stocks only under in the derivative segment. It is future segment and option segment. Similarly, in commodity, we'll discuss later. Currency, Indian currency, we just keep on this currency. And the final one is index. What is into index? Index is the collection of the particular sector index or particular group of index. For example, Nifty IT means, I think we'll discuss was discussed 2 days before like that. Okay, if, for example, Nifty IT index means is a combination of top 10 stocks like Wipro, TCS, Mindtree, Infosys like that. In auto sectors like Maruti, Tata Motors, Ashok Leyland, Bajaj like that. So it's called as the index. Okay, so they are simply called as Nifty index, IT index, auto index like that. Okay, this the name is called as index. So we have 4 kinds of future contract in stock market: stocks, commodity. Commodity is nothing but as a real world product like crude oil, gold, silver, copper, zinc, aluminum, etc. Okay, so these are the 4 segments in derivatives: stock, commodity, currency, and index. Okay, some major terms in future market. Before entering the future market, you just observe these major terms. It's play the vital role in stock market. That play the vital role in future market. Okay, compared to the stock market, future market is very riskable one. Okay, one of the first term is leverage. What is meant by leverage? Futures have a leverage which can increase the return, but it also a losses also. Most of the times, it increase only losses, not for returns. Okay, so 99.9% you just avoid the leverage. Okay, it's a public forum. I'm not saying this word, but for this, what I'm saying, leverage is one kind of suicide in stock market. So don't try to use leverage in stock market. This may humble request for all the freshers as well as the experienced persons. Okay. Second one is expiry dates. Obviously, just now we discussed about the expiry date. Each stock, each futures have an expiry date. Stock don't have an expiry date, but the stock will under the concept, under the category of derivatives, have the expiry date. We'll discuss in later. Similarly, price changes. Okay. Similarly, every time frame, based on the time frame, based on the days, the option price will change. Okay. And the last one is index futures. Index is nothing but just now I told it's a collection of particular sector or collection of many sector stock in one group. Is called as index. For example, Nifty 50 index means out of 50 stocks, all kind of sector stocks will be included. Like automobile sectors have 4 stocks, IT sectors have 5 stocks, pharma sectors have 10 stocks. So each and every combined with the 50 stocks for each sector, it is called as Nifty 50. So these are the 4 points are very, very important in terms of future market. Okay, let's go with the leverage. It's very, very important. For example, if you have amount 1%, it depends on the broker. Okay, if you are opening the demat account in any broker, based on the broker, they are allocating the leverage. Okay, for example, if you have 1% of the amount, that particular broker then give the 2% of the 2 times of the leverage. For example, if you have 1,000 rupees instead of the dollar, can convert as Indian rupees. For example, if your capital is
Excuse me, sir.
1,000 rupees,
Sorry.
the broker. Hello.
Excuse me, sir. Hello, sir. Sorry to
Yes.
interrupt you. There is a lot of noise coming music from some Parkavi. Can you please mute?
Sure. Second, sir.
Sir, there is a lot of noise. Somebody's mic. Parkavi name.
Yeah, I also here. I think now clear. Correct, sir?
Thank you.
Yes,
Hello?
sir. It's clear now. Thank you, sir.
Okay. Yeah, okay. Okay. I guess. So, if example, if you have 1,000 rupees in your account, the particular brokerage they give two times, that means 2,000 rupees. Once you get the profit of even 1%, you get the 20 rupees. The ROI, return on investment, is 2%. In profit point of view, there is no issue. Based on the leverage, you can increase your profit and return of investment. There is no issue. But in case we go with another scenario, okay, I will explain. Okay, I will explain. For example, you have 10 rupees. Okay, you have just 10 rupees. You can buy the 1 rupee stock. Okay, if you consider, you can buy as a 1 rupee stock means how many stock you are going to buy? Are able to buy?
10.
10 stocks.
10 stocks. Okay, good. 10 stocks. Okay. But in your broker, they give the leverage into 10 times. 10 into 10, 100 rupees. Correct. But your original amount is only 10 rupees. Brokerage give the leverage for 10 times. So now your current amount is capital is 100 rupees. They have 1 rupee stock. How many stock you are going to buy with leverage?
100.
100.
Yes. Good. 100 stocks you are able to buy because you have the leverage. Okay. In case the 1 rupee stock will become 0, what is your loss? Maximum loss? What is your maximum loss?
10 rupees.
Your maximum loss is 10 rupees. Okay. The same scenario, the 1 rupee stock, it will become 0. What's your loss? What's your loss?
100.
100 rupees. Out of 100, what is your capital?
10 rupees.
10 rupees. Correct. And what about remaining 90 rupees? Who will give the 90 rupees? This is the exact today's scenario of stock market. Most of the people, they are losing the money by getting the leverage like that. If you get the profit, there is no issue. You can move on. But once you get the loss, how will you get the 90 rupees? This scenario, it creates some negative vibe for the traders. That's why most of the suicides and some heart attacks, whatever it is, I'm not mentioning the name. So these kinds of negative scenario will create this kind of worst thing in the stock market. So again, saying the same word, don't take a leverage at any point of time. Brokerage, they are always recommending to give the leverage, okay, but try to avoid the leverage. You got my point, guys?
Yes, sir.
Yes, sir.
Okay, you try to avoid the leverage. Okay. Next one is very important one is lot. What is meant by lot? Okay, simply in stock market and equity, you can able to buy a single stock. You can easily buy a single stock in stock market. But in future, you are not able to buy a stock as a single quantity, or you are not decide how many quantity you are going to buy, because lot means already stock exchange will decide how many quantity in particular stock based on the market capitalization, based on volatility. For example, if I'm going to buy the stock of Tata Motors, they are already defined the Tata Motor lot size is 550. Tata Motor lot size is 550. Who will decide? Decide by the exchange based on the capital market capitalization, volatility, liquidity, and some criteria. So, if in future in stock in equity, I can able to buy the single stock in Tata Motors. I can easily buy one stock at Tata Motors in equity market. But in future market, if I wish to buy the Tata Motors, I can buy how many quantities?
550.
Yeah, that 550 quantity in Tata Motors is equivalent to one lot of Tata Motors. Got my point? Hello?
Yes, sir.
Okay. Sir, where we find out these kinds of lots, sir? Simply, once you have a demat account, once you are using the adding the script in your watch list, once you're clicking the buy button, the number of lot for the particular stock is always shown. But okay, you don't have a demat account means, okay, we just use this link. Okay, it will show all the stocks lot size. It's very clearly. Okay, from Alpha Nifty Bank, how many? What is the size of September, October, November? So based on 3 months, it will be the lot size. Fin Nifty 25, Nifty 50. We'll check the Tata Motors whether it's a 550 is correct or not. We'll move on to the Tata Motors. Tata Motors, yes, Tata Motors size is 550. Any other stocks from participant side? Hello.
ITC.
ITC. Yeah. ITC lot size is 1600. Okay. By using this website, you can find out the lot size of stock. Otherwise, you have a steps. The proper step to find out the lot sizes. You go for our official exchange website, nseindia.com. Okay. They will show you. Go with nseindia.com. In nseindia.com, you can just type the whatever stock you want. For example, I go with Airtel. For the Airtel, I just click. After that, I just go on to the derivative part. For the Airtel. I think the market closed. So in market time, you can check it here. It display the derivative option. Okay, once they click the derivative options, it will show the future tab, stock future tab. Once you click the futures tab, they find out the lot size by trading information. I think the market closed, so it will not display. So we'll check on the market time from 3 to 9:15 to 3. Oh yeah. Just click the derivatives. Once click the derivatives, click the trade information. Once click the trade information, select the particular any futures. Just click the future, and here the market lot size is 550 for Tata Motors. Okay, so this is the correct method to find out the lot size of any particular script. Or if you want to note all the lot size, means you go for the particular website don.co. Okay, NSE F&O lot size. So in this website have all the F&O stocks with 3 months lot size, September, October, November. Okay, so if you have the all the lot sizes with the index, it will be available in this website. Okay, so this means a lot. Okay, next one is how it will, once you decide to trade this is the index value stocks. Okay, Nifty 50 exiting lot size is the old one. New lot sizes is the current lot size. So 25. Nifty, financial Nifty is 25. Mid cap Nifty is 50, and bank Nifty is 15 lot. Okay. Okay. We'll move on to the live example. If you're going to order the futures in any brokerage, the market capitalize, there is margin will be differ from one brokerage to another brokerage. Okay. Let me explain with one example. If I'm going with Zerodha, because I have the account in Zerodha, the same I'm selecting Zerodha. I'm not recommending Zerodha. Okay. Just now adding the Tata Motors. For example, in future, always displays the 3-month futures. So September, October, November, every Thursday at the end of the last Thursday of every month has the expiry date. Okay, you can buy at any time, but expiry date is end of last Thursday. If last Thursday is holiday, it may the expiry date will convert as the nearby date. For example, Wednesday. Okay, so every month end of last Thursday is called as the expiry date for all the stocks as well as the index value. But index value have weekly expiry also, so you just ignore it. Generally, monthly expiry is last Thursday of every month. Okay, I think today is the last expiry of September, so I'll move on to the October. Okay, I just click here to buy. Okay, how many quantity? How many quantity?
550.
550. How many lots?
1 lot.
1 lot. Okay. If I am increasing 1200, it converts as the 2 lots. You are not able to add as the 560. It is not possible. Okay. You can add it the lot into number of times. For example, I press 1500. It should be a 2 lot, or it may be a 1 lot. Okay. This is the 550 is the 1 lot. What's the margin value?
1 lakh
What's the margin
8,000.
value? 1 lakh 8,000, almost 1 lakh 10,000. What's the market price is? 999, almost 1,000 rupees. But if you really want the 550 quantity at 999, how much of capital you need? 550 into 999. 550 into 999. So you need 5,50,000. But most of all the brokers, they are giving the just 10% or 20% leverage to allocate the margin to buy the futures. That's why they are giving 1,10,000 rupees out of 5,50,000. So if you have the 1,08,000 rupees, you can buy the Tata Motors future. But once the Tata Motors will increase 1 rupees, you get profit 550 rupees. Similarly, the Tata Motors decrease 1 rupee, you lost 550 rupees. That's why future is very, very risky. If you're getting the 10 points profit, 10 into 550,
5,005.
1,050 rupees loss. This is a very highly risky one in future. Okay. For example, in Zerodha, it will take 1,08,000 rupees. We go for another broker, we'll check it. And I have also account in Enrich. Okay. We'll move on to the Enrich. We'll check how much of margin needed to buy the same Tata Motors at 1 lot. Okay. You can open any number of demat account. There is no issue. All the demat account are free only. There is no issue. Once get the OTP. Okay. Now I can add the Tata Motors. I just same October future. I just buy it. 550, 1 lot. What's the required margin? 1 lakh?
1,64,6,410.
6,400. So maybe 1,06,000. So this is a differ from one broker to another broker. In Zerodha, okay, in Zerodha, you can they need in Zerodha, same Tata Motor, same 1 lot. The price is 1,08,000 rupees. In Enrich, 1,06,000 rupees. The price will differ from one broker to another broker. Okay, but price lot size it cannot be changed. But margin price it will be changed, depends on the brokerage. You can open the demat account any day, any broker, any vendor. There is no issue. Okay, it's clear, sir.
Yes, sir. Yes, sir.
Okay. So in stock market only, apart from the e-commerce group, you can sell the product without having any product. You can sell one. After that sell, you can book the profit or sell the book the profit by buy order or lose the product buy order when you put the sell. Similarly, in it's called as short. In long, there's two terms of in future market or derivatives market, long and short. Short means first you can sell the order or sell the stock and buy it. In long, buy the stock and sell it. It may be a profit or loss, but we have two choices: sell and buy and sell. In generally, stock is not able to sell and buy in position. Even intraday is possible, but in position trading, the individual stock are not able to sell and buy. Only buy and sell. But in future and derivatives, you can sell and buy. Also, buy and sell is possible in only in derivatives market. The derivative markets may be option or future or currency or commodity. Okay, this is one of the advantage in future market. In equity market, it's not possible to sell and buy in position trading. Okay. Next one is sorry, commodity market. What is a commodity market? Commodity market is nothing but as a trading the raw products in our real lifetimes. For example, gold, crude oil, aluminum, copper, zinc. So everything. Okay. So each and every product we are using our daily life for trading in commodity market. So commodity, all the commodity market will under the control of MCX, like NSE, BSE for stock exchange. Similarly, MCX is for commodity index. Okay, we go for just refer the mcx.com, mcxindia.com. This exchange exclusive for multi-commodity index. Okay, so all the commodity products details will be available in this website. Just go for the product means. So gold meaning silver, copper, aluminum, crude oil, cotton, gas, natural gas, everything will be available here at mcxindia.com. Okay. 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 As a commodity market, as per the Indian time, the market will open at 9:15 and closed with 11:30 p.m. Okay, but stock market is always closed at 3:30, but commodity market will run up to 11:30 p.m. So we'll move on to the live market. Okay, this is the live market. Okay, so I will take gold mini. So I take as a 5 minutes time frame. Out of 5 minutes time frame, my support resistance is correct or not? Participant, please. Hello.
Correct, sir.
Correct. Okay. Second one. This is the open question for all the participants. Any patterns are able to find in this 5 minutes time frame? Any pattern? Just observe the chart.
So
Sir, this is the live market, sir. Time
So
is 8:05. Live market.
so it's an upward pattern.
What, ma'am?
Upward pattern. Is it upward?
Sorry. Up.
It's going up.
Uptrend. Or?
Up.
This is downtrend, sir.
Downtrend.
Upwards.
Okay.
Downtrend and side trend.
Mini double bottom.
You are saying double bottom, this one and this one. It's very short period, sir. Just 8:50. It is the first bottom, and the second bottom is 7:20. Within 10 to 15 minutes, you don't consider as the double bottom or double top. At least you will take half an hour or 1 hour.
Okay, sir.
Sideways.
Sideways, not a sideways, sir. It's a clearly one pattern. Anyone?
Down.
Just observe the chart. I zoom it. Anyone? Okay. It's a clear downtrend, as madam said, and I draw the trend line. Okay. After that, I just mark as. So this is the live market. You can follow me. Don't take the trade based on this analysis. So this is a clear downtrend for 5 minutes. Lower low, lower low, lower low. Now it breaks previous high. Correct? Going to break, not break. Correct?
Yes, sir.
Hello. So you just wait for correct opportunity to take the trade. Once it breaks 75, 785, above 75 and 785, go for buy. Once it closed above 75, 785, almost 75 or 785 are okay. But once it's break and closed, once it's closed, what's my target? This is my target. This is my target 1, and this is my target. This is my target 2. But once it breaks 785 above only, I will take the trade. Otherwise, I just simply wait. I am the one of the audience in the stock market. I'm not the player. Once I will become a player, when it means once it closed above 75785 at the time frame of
5 minutes.
very good, 5 minutes. At the time frame of 5 minutes, it closed above this value. I go for buy. Okay. I take this snapshot. Okay, for our future reference, whether it will work or not. Okay, I don't know. Okay, it is not able to share the pictures in Google Meet. Okay, I just take the snapshot. Okay, no problem. We'll wait. Before our closing our session, we will see what will happen. Whether it's go to achieve the target or first we get the trade. Okay, once we get the trade, we have only 2 choices. First one is maybe hit the target or it may hit the stop loss. Which one is stop loss? This is stop loss. So before below 75613 at 5 minutes time frame, it's a stop loss. This is a live market, sir. Okay, take this download this picture. Okay. So this is the correct way to analyze any script. Okay. Once you see the chart, observing the chart, now it closed. Correct. Now this 5 minutes time frame is closed. What is the value of closed value of this candle? Anyone can say? What's the closed value of this candle? 85 candle. Sir, just see here, closed value. You just see here. I put the cursor on this 85 candle. What's the closed value? Whether it closed 75, 785 above or below?
Above.
Above. Then you can take the buy or not?
Above.
Yes, buy.
Yes. Now you can just take as the buy in paper trade, not real trade. Okay. So your target will be 0.26% at target 1. In target 2, 0.41%. As a percentage is a 0.41. As a point, 311 points. Okay, we can just wait and see what will happen in this scenario. Okay, we'll move on to our normal class. Okay, this is the commodity market. So based on this commodity market, you can trade compare with the stock market. Commodity market is more risky because volatility is very huge, and every commodity market as a volatility will increase after 6 o'clock only. So evening 6 o'clock only, market will getting the huge volatility. So as a fresher, don't think trade at commodity for freshers. Okay, you just go through the what are the process are going in commodity, what are the things are going in commodity, how the lot size are differ from one commodity to another commodity, how much of margin we needed. So these kinds of things are you can go through, and it will take some time. After that, you can think about the traded commodity. So initially, freshers is not recommended to do the trade at commodity market. Okay. Okay, this is the future market. So I repeat once again. In future, before going for the future market, all the future derivative market have 2 types. In first one is futures and the second one is option. Okay, in future market, what is the future market? You can buy the product at number of size. That size is represented as the lots based on time frequency. Without time frequency, you can't do a single trade in derivatives, even the future or an option. Okay, based on this time frequency, you can fix the target as well as the stop loss, because they have a you can't trade by using the speculation or hedging. It's very riskable one. Okay, so at this derivative segment, we have the 4 contracts: stocks, commodity, currency, and index. In the key terms of the future markets are leverage, expiry date, price changes, and the index futures. Leverage is very important one. So based on the brokerage, they can allocate the leverage for your capital market. Okay, try to avoid the leverage. If you have the money, you can go with the futures, and if you have a proper knowledge with time management, you go with the future. Otherwise, we can just skip the future market. But same time, you can just learn something from future market. Means just to go through the future market. What will going in future market? Okay. And second, the next one is a lot. So in future market or option market, everything you can buy a product in number of lots. This lot size is decided by the exchanges based on the market capitalization, liquidity, and volatility. We will not decide the lot size in any stock or any commodity or simply any derivatives. Okay, so based on this lot size, you can your profit and loss will be decided. For example, if you go with Maruti, the lot size is 50. That means you can buy a stock, buy a future in Maruti means the 1 rupees goes on, go up, you get the profit of 50 rupees. Go to the, if you have a 1 rupee loss means you get 50 rupees loss. So based on the lot size, your profit and loss will be decided in future market. Okay. So any doubts in the future market, guys, you can ask. Any doubts in the future market? You can ask, guys.
Sir, I have a doubt.
Yes.
Sir, when you was asking like say some stock for showing the graph, you told that this is not intraday and this is intraday. How did you come to know, like how come we will know that this stocks are available in intraday and they are not available in intraday by seeing the graph?
Yes, good. Just you can simply see the any stocks, you can easily identify. Before that, I just remove the indicator. So this is the 5 minutes time frame. You can take 5 minutes, 15 minutes, even though 1 hour for intraday. In my point of view, first I recommend, not recommended. In my suggestion, you go for the intraday. 5 minutes is the best time frame for intraday. You don't go for 10 minutes, 15 minutes, even 1 hour is a risky one. 5 minutes is the best way for intraday. First point. Second, what ma'am asked is how can identify whether the stock is good for intraday or not. You just see the stocks. There is no gap between the movement. You can just backtrack any number of months or any number of days. There is no gap. So it means the volatility is a huge one. And second one, there is a no gap between this one candle to another candle. That means the people are regularly buying and selling these stocks. First one. For example, if you go with Arcom, now you can see this chart. You can see the gap. And similarly, you go for Jayprakash Associate, JP Associate. These are the penny stocks. Just see the chart. Where is the chart? You go for daily time frame also. You can just see this difference.
So sir,
There is no liquidity.
So this means that this stocks are not available for intraday. They are like for.
It is available. No. It is once the chart is displayed. Once the chart is available in the any brokerage terminal, it is available in intraday, but it is not advisable one.
Okay, sir.
It is not a healthy one. For example, with real-time example. What kind of pictures you are regularly watching, ma'am?
Sorry?
What kind of movies are you regularly watch?
I normally don't watch much, but preferably animation movies.
Yeah, animation movies. Okay. But if you are interested in animation movies, you are not concentrate on any family oriented or action oriented or comedy oriented movies. Correct. You are focusing only on animation movies because this kind of movies are you like, correct?
Yes, sir.
Then so if you are moving with the animation movies, if you have many numbers of people are like in the animation movies means compare with the family dramas and other dramas, animation movie will do the high volatility, high returns in the cinema business. But compare with the action movies, compare with the family dramas, the animation movies are very less. Why? Because most of the peoples are more like family dramas and action movies compared with the animation movies. Correct?
Correct, sir.
That's why the market capitalization is high in family dramas and action movies compared with the animation movies. Similarly, we have a 5,000 stocks in stock market, but most of the people are focused on very few stocks. That's why the market movements are very high, capitalization is high, volatility is also high. But these kind of stocks are people are just ignored. That's why there's a no trade in between days. Correct? You got my point, guys?
Yes, sir. I got your point. Thank you.
Any other doubt? What is win rate? Sir, win rate is, we are not, we can predict the value of the particular stock, but we are not predict the win rate or success rate. We are predict the particular stock price. For example, the stock price is 50 rupees means I can predict the price, it goes on 55 or 45. Whether it's a 55 or 45 is a win rate or loss rate, we are not able to. Any other doubt, guys? Leverage and margin are the same? No. Leverage is given by the brokerage based on your margin, based on your capital amount. For example, if you have 100 rupees, for example, consider me as a broker for you. So I can use the leverage 10 times means 100 into 10, 1,000 rupees I will be allocated for as a leverage. Okay. The 10 rupees is my own capital and the remaining 90 rupees it will be allocated by the brokerage. It is called as the leverage. The 10 rupees is called as the margin amount to buy a particular future. So leverage and margin are not same. Akmal Aslam, are you clear, sir? Hello. Any other clarifications or doubts in today's class?
Sir, I have a general doubt, sir. Can I ask?
Yeah,
so
sure,
can
ma'am.
you give a little bit idea about what is SIP, Systematic Investment Plan?
Yeah, systematic investment is a mutual fund, ma'am. So if I'm not able to allocate spend the time in market, first point. Second point, I don't have that much of knowledge in stock market. Second one, and third one, I'm not interested to learn stock market. The third point, but I needed some good return in my future means I go with the mutual fund. So in mutual fund have two types. If you are going to invest a full cash or full amount in a single time, it's your choice based on your economy. Sir, I'm not able to invest a whole amount at a single sketch means I will move on to the systematic investment plan. So I can invest every month for a particular time period. It may be 3 years or 5 years or 10 years. Until I can fix the years, I can spend some amount for the particular mutual fund. This is called as systematic investment plan. You can change the investment plan based on your economy. For example, I can start with investment 500 per month. After 1 year, I can increase my investment plan. I can increase my SIP 500 to 1,000, 1,000 to 2,000. It depends on the person.
So it's fully related to mutual funds, sir.
Yes, it's 100% mutual fund, but that mutual fund, you can, before going to invest that mutual fund, you can analyze whether the particular mutual funds, where they are can to invest. Their stock market or bonds or FDs or gold or real estate. You can just analyze the particular mutual fund, then you can decide whether going to invest, it will sit in the particular mutual fund or not.
So can I use all those indicators which you gave us that day and find out like whether this mutual fund is okay or not before?
No, there is no link between indicators. Indicators only for stock market, not for
No,
mutual.
I'm not saying today's indicator. Like that day you gave us, right? REO and all those things, like 6 and 7 indicators you gave us, with the different margin of like below 20% and below 30 and all, like did for yesterday.
No, if you want to invest in mutual fund means you can refer the particular sector return on investment for the past few years, maybe 3 years or 5 years, return on investment, how much they are give the return, what are the areas they are covered to going to invest in future project. Then you can find out this scenario. Then you can decide whether you are going to invest or not. As my personal opinion, you don't go for a separate individual sector in my mutual fund. You always think about the diversification in mutual fund. That's why I'm always recommending my clients to invest in mutual fund as index-based mutual fund. For example, I'm not invest the IT index, but invested in Nifty index, because in Nifty index, all the kinds of sector stocks are available. In case IT index will go, the opposite bank sectors will go for high. So you have the balance in this mutual fund. You got my point?
Yes, sir. Yes, sir.
So better you go for index-based mutual fund. Any mutual funds, maybe Aditya Birla or ICICI, it may be differ from company to company, but you can select index-based mutual funds, not sector-based.
Okay, sir. Thank you, sir.
Any other
Hello,
queries?
good evening, sir. Can I ask one question, please?
Yeah,
If
sir,
not-
please.
If there are no questions, yesterday also I asked. In further to this ma'am's question, if I was to do this mutual fund in banks, they are always asking, sir, you have money in your savings bank or in FD. We have our officer or advisor. He can put some money in mutual fund. Is that a good way to go?
Before that, you can just ask the particular advisor or staff whether you're going to invest what kind of mutual fund. It's an index-based or sector-based. What kind of mutual fund they're going to invest?
Yes, sir. As I understand, because you answered already to ma'am just now, but both the banks asking, suppose I have account in Union Bank, ICICI, both are asking always, sir, please come have a seat. 1 hour, they give us 1 hour, we will put your money. It is just sitting at 5-6%. You will get 10, 12, 13, 18%. So both the banks are saying, I don't know what would be the difference between the advisor of both the banks and whether to go or not. I understand now what you told about indexed mutual fund, but is it a good idea to listen to them till the time I get some knowledge?
Yeah,
Or
you can listen. There is no problem. You can listen what they are trying to convey, because listening is always good. So just listen, and you can once you receive the information, you just backtrack, and you just analyze whether their things are whether it should be worthable or not. Once if you feel it should be worthable, just you can move on.
okay, but doing through their bank account like Demat account, is it a good idea, or should we do through some Zerodha?
Yes, sir. No problem. You can invest the mutual fund through bank account, even bank account app. The SBI Access, topmost banks are they are providing the mutual fund investment through apps.
Okay, no problem, no, sir. I mean,
no
not
problem,
that they're
no
going to
problem,
make
sir.
too much. Okay.
No, sir. Nowadays, everything in digital format. There's no need of paperwork.
Okay. No, I mean, I was not worried about money security, but only thing is they're promising 20%, sir, 30%, sir, you will get,
No,
don't
sir.
worry.
Sir, in money oriented, no one can give the warranty guarantee for the profit. It may be flexible, sir. If I am assuring the 10%, it may be 12 or it may be 8.
Yes, sir. Thank you, sir. Thank you so much. Thank you.
So, as a live market, what we analyze till now, we already buy this gold as per our scenario. We just wait for only go for hit the target, or it goes for stop loss. Okay, we just wait until 11:30 or until it gives the result. We have only two kinds of result. Only it gets the hit the target or stop loss. Okay, let's see what will happen gold market. Okay. Any doubt, guys? Today's scenario. Okay, if you are really interested, I give one. It's not an assignment. Don't think like that. Tomorrow you can find out by using this technical analysis. I can the out of 400, 500 participants are there in meet. So just we can find out at least one stock based on one technical analysis. For example, sir, SBI in trend line, sir, Kotak Mahindra in support resistance, sorry, channel, sir, Ashok Leyland in double bottom, sir, Maruti in double top, sir, Dabur in double bottom, like that. So at least I expect 10 to 20 members to find out the stocks based on the technical analysis tomorrow. Say something, guys. Okay or not?
Okay, sir.
Yes, sir.
Based on only technical analysis, not using any you can use any technical analysis, even chart, even trend line, or double top or double bottom or channel or trend, or even if you have any idea about other technical analysis, because technical analysis, huge technical analysis topics are there. By using any technical analysis, you can just mention the stock and what kind of technical analysis will match in the particular stock. You got my question?
Yes, sir.
Any other doubts?
Sir, am I audible, sir?
Yeah, yes, sir. Tell me.
Hello, sir.
Yeah, tell me, sir.
Sir, from investor perspective side, suppose I am an investor, I have invested in mutual fund and in stock market. So, sir, the maturity value as a receipt at the time of maturity, is it taxable or tax exempted, sir? The maturity amount, the benefits?
Which one, sir? Stock or mutual fund?
Yes, sir. Suppose I have invested in mutual fund and another in stock market also. So
Both.
in both these cases, yes, sir, in both cases, at the time of maturity, the benefit I received at the time of maturity, is it tax exempted or taxable amount, sir?
Yeah, but it is based on time frame, sir. If you are putting the amount in mutual fund, the holding period is very, very important. If you are hold 3 to
Yes,
5
sir.
years.
Suppose.
Yes, yes.
Yes, sir. Yes, sir.
Yeah, tell me, sir.
Suppose, sir, I have invested for 10 years in mutual fund and in stock. So suppose the investment period is 10 years, and after 10 years, I received the maturity for mutual fund and in stock market as well. And at the time of maturity after 10 years, the amount will be tax exempted or taxable amount, sir?
Sir, based on the mutual fund, some of the mutual fund is exclusive for tax deduction. That kind of mutual fund, there is no need of pay the tax. It's absolutely free from the tax. Apart from that mutual funds, you can pay the amount after 3 years and after 5 years. You need to pay the tax based on the how many years you hold in the mutual fund. Similarly, in stock market, in stocks below 1 lakh, there is no tax in the particular year. Once you get the profit 1 lakh within a year, you pay the amount of after 1 lakh. For example, in 2024, you get the 1 lakh 10,000 rupees, means you just ignore the 1 lakh rupees. After the 1 lakh, you 10,000 rupees, you need to pay the tax.
Yes, sir. Yes, sir. Okay. Sir, can you please someday, or actually today is the 4th day, tomorrow is the 5th day. So could you please give us some advice, like in as investor perspective view, which mutual funds and stocks are tax exempted at the time of maturity, sir? If possible, sir, please.
Yeah, sir. Tomorrow I will share some good mutual funds and government sector stocks with they are returning the high dividend.
Yes, sir.
Yeah, stocks. Tomorrow I plan to give you, sir.
Yes, sir. Yes, sir. Yes, sir. Sir. Thank you, sir. Thank you so much. Thank you.
Sir, sorry.
Any other doubt, guys?
Sir, quick question about the tax only. 1 lakh is tax exempt, but so if I have income from other sources, maybe 2 lakh, 3 lakh, or 4 lakhs, so 10,000 will be added on top of that, or 110 will be added?
Sir, everything should be added, sir, because in as per the income tax, they are not split how much profit comes from a single segment. They are calculated for at the end of the result how much profit in the particular year. So based on that only they can calculate the income tax.
Okay. So in case my income is exceeding that minimum slab, then
Yes,
that
your income is exceeding the particular slot. It may be first slot, second slab, or third slab, whatever it is. Once they're crossing the slab, you definitely will pay the interest. IT.
for 1,10,000 profit directly then.
Yes.
1 lakh won't be sorry, right? You said 1 lakh is exempt in case of
1 lakh is exempted for your overall slab. For example, your slab is 2.5 lakh. There is a no tax, means you're getting the 1 lakh profit. Then there is a no tax for the particular 1 lakh. But once you crossing the 2.5 lakhs, means you should need to pay for the tax for that 1 lakh also.
okay, okay, sir. Thank you. Thank you. I thought.
Okay, sir.
Thank you. Thank you.
Any doubts, or we will wind up, sir?
Sir, we can wind up now, sir.
Yes, sir. Thank you for your help. Thank you so much.
Thank you for the audience.